And now more specifically, how that is being possible. Here, basic introductory question would be, what factors does global HR planning need to consider? What are the factors? I gave you some examples so far. Here we would like to have more systematic approach. Some of the factors to begin with first, what we can think of is here what kind of work and tasks need to be carried out, what is included in HR planning, and who will do this kind of work. Before going into the aspects, just some kind of general points. As I already mentioned, global HR planning should be aligned with strategy. Already in the beginning stages, we talked about strategy in our previous session. So the idea is strategy planning should be coordinated and ideally jointly developed. And then HR planning then also then eventually will execute then the strategies that have been defined. If it's maybe a growth strategy, you have to grow in the foreign market, or you have to consolidate and so forth. And typically what is then included in doing HR planning would be to evaluate work demand. Work demand on a global perspective means demands in the headquarters, in the foreign subsidiary, and also as a global corporation as such. And that is important. That's anyway one of the first steps when carrying out HR planning, meaning some kind of analysis. Such as an HR planning and stage 1 analysis in a domestic company, you would look at the different segments of your labor force inside one country. You have technicians, you have R&D people, you have marketing people, HR people, and so forth, and then you would analyze that. In a global company, it's not just in one country, but in all of the markets you operate in, and that needs to be also coordinated and consolidated. And then you need to design and make decisions regarding work organization and design. That, of course, again, should be aligned with strategy. And then in this global organization, that needs to be coordinated and also specified in tasks, responsibilities. If you have a regional headquarters, think of the different organizational structures. That's all important. Here it's all a little bit abstract. Some aspect we'll discuss in more detail in the following minutes. Who will do this work? So the HR department would be in charge of this. You may have global HR departments in large companies or strategic HR departments who would then make the big picture, and then maybe also you have many HR personnel looking at all to these details, then really to understand scanning different markets, analyzing the existing workforce, forecasting and so forth. There can be, in large companies, there can be hundreds of people. In smaller companies, maybe just one person who would be in charge of all these tasks. So I briefly mentioned this scanning. I think of global companies. They operate in 40 countries, in 50 countries, or Siemens maybe operating in 100 plus countries. And it would be very important when you have this global HR planning, really look into the different factors across different countries. Some of the factors here, so you think of your global workforce. Think of Siemens, Volkswagen. They might have almost 500,000 of employees spread across many, many countries. And they still need to plan for next year. Typically, HR planning, your typical time horizon would be 1 year for the next period. You make your plans, you analyze, you have estimates, how many people you need to hire. The thing is also HR planning, hiring people, planning, hiring or laying off people or promoting people. That's all part of HR planning. This needs time. So there's quite some time gap. You plan to hire someone. In Germany, that takes time. So we are now trying to recruit a doctoral student and a research associate. And so we need to make the job description, then we need to prepare the job ad, then it needs to go to HR department, then it needs to go to the gender officer. And typically from the idea, let's hire someone until we have the job ad, it may take 1 to 3 months. You place the job ad, then it takes at least 4 weeks, at least here regulation. Deadline in 4 weeks, and then you have the deadline, and then you have a pool of candidates you would like to invite for interview, which needs to be approved by HR. and then HR approves, and then HR approves, then you can invite for interview, and then you have interviews or assessment center, workshop, whatever you do. And then again, it takes time that you make a decision, which needs to be then forwarded to the HR department, labor council, and an end. So meaning from beginning until finally you hire someone, easily it can take 3 to 9 months. Okay, now coming back here to this framework. Yeah, so we have labor market conditions, governments and labor interest organizations that all have an influence, global competition overall, but also in this one market, and then cross-national cooperation and conflict. And we'll talk about each of these points one by one. Here we have one, labor market condition characteristics, the need for careful ongoing scanning of various national labor markets. That means also for global companies, when they do business in many different countries, that they would constantly observe and scan the markets. They can hire some agencies that provide some reports about the availability of certain labor pools, also in-house, and they can then also survey and ask their local HR colleagues, what is the situation in certain markets? And all kinds of characteristics. We talked about the legal characteristics, so the legal framework given in different countries, and also very simple, the availability. Where do we have many young and highly educated people, or maybe less so? And we'll talk more also later how this then also can lead to competition. Very simple examples. Eastern Europe. Eastern European countries joined the European Union. They became member states, so there was very easy mobility and transfer and everything. And then many Western European companies, they rushed into Eastern Europe to take advantage of it. Because that happened very soon after, the labor cost in Eastern Europe went up. In Serbia, and many of these Eastern countries used to be very attractive, but then the whole situation changed very rapidly, and then it was less attractive. Here's some indicators to compare some countries. There's lots of statistics. Here's just one example. I think here there's some statistics from one of a consulting company. They looked into different countries and different aspects in terms of financial attractiveness, so meaning relatively low cost of labor. That's here the dark blue. And then also availability. It's also how many people with a certain set skills you're seeking are available in a certain market. It's this one here. And then the overall business environment, because if you do business in a country, also the business environment and also the legal environment is very important. Is it friendly? And here we can see it in lighter blue, and then in the lightest blue shade, digital resonance or the IT structure and so forth, everything. And then they profiled according at least to their ranking some of the countries that would be very attractive for sourcing people. And based on that ranking, they came up with India would be a very good source. It depends, of course, who's making the statistic and what kind of people you're looking for. Maybe this is some kind of statistic looking for IT professionals. And according to that profile, that would be a very attractive market. And sourcing can mean both. You will relocate your offices, and you set up maybe foreign subsidiaries in India, or it can also mean outsourcing. You find some contract workers or cooperate with some of these large Indian IT companies, then to source people or to give contracts to those other companies. Here yet another example, because on the one hand, you can relocate production, but on the other hand, you can also, people can relocate, they can move. They can move across borders. I think also in this classroom, I remember there are quite a few students not from Germany. I remember there was one student from Sweden, India, Spain, and so forth. Maybe you like Göttingen, Germany so much, and maybe you will stay. Yes, no, we'll find out, anyway. Germany, of course, within Europe is, I think, a very strong economy, offers many jobs, a very low unemployment rate, no signs of recession yet, or no, let's say no strong indications. There are quite some indications in many industries, but compared to other markets, not as much or as severely. And here you can see the relocation of non-Germans to Germany based on different origins. Yeah, we have from 2004 when the EU enlargement took place, so then there were new Eastern European countries added. Yeah, I already mentioned many German companies, they went to Eastern Europe. Yeah, at the same time, we also have many Eastern Europeans who then relocated to Germany. I think it's this line here, right? So you see quite substantial. Yeah. Now, recently, so we had from 2004, it went up, slightly down, because most of the people who were most eager, they already came, and then again an increase. Here, maybe you remember what happened in 2008? IMF crisis, financial crisis, yeah, mortgage crisis, yeah, and the different labels we use it. Originated in the US, yeah, but had global implications. And that meant for many countries, they have faced lots of difficulties. Germany, on the other hand, they went rather well through the crisis. We also had in Germany a long period here where we had very modest salary increases in Germany. So relatively, Germany has become cheaper to locate and to source people. Compared, let's say, to France and some other countries. So Germany has become more competitive, and that meant also the economy was doing relatively well compared to other European countries, and that you can see then attracted many people from outside Germany to relocate to Germany. From 2007 to 2013, again, we have increased accession of new member states, but then also here from Southern Europe, Spain, Italy, and so forth. They've been member of EU for many years, but as we know, they suffered very severely following that crisis. There was also not the debt crisis in Greece. Some even extended it, I think what was called PIGS. Portugal, Italy, Greece, Spain, yeah. Not very nice abbreviation. I don't know who coined that, but essentially we had major recessions in most of Southern Europe. And as a consequence, we had unemployment rates in Spain, youth unemployment, 20, 30 and more %. It's huge, 1 to unemployed. It's a very high unemployment rate. So as a consequence, many young people then came to Germany to find jobs here. So we have quite some relocation. Inside Europe, it's relatively easy because you have no problems. You get a work permit, you have free movement of labor inside the EU and then also some other countries such as Switzerland. And so that's just another graph illustrating the consequences then also for the workforce in Germany. And these mean the jobs that pay also social insurance benefits. That means that excludes these 450 euro part-time jobs. So these are full-time or near full-time jobs where you have to pay insurances and so forth. From an economy perspective, it's also good because we get more tax income and so forth, and the insurances are being filled. And here you can also see the major change. So overall, the labor force has increased, but in particularly, it was contributed by foreign workers, meaning from non-Germans who relocated to Germany and paying into also the German system. And that's also one of the reasons why salary increases were very moderate in the past in Germany, because we had these people who come from Eastern Europe, or maybe those who had no jobs in Southern Europe, and also the wage level in Southern Europe is lower, much lower than here in Germany, so that suppressed wages in Germany. It's very simple, supply and demand. We have more supply, even the supply is induced from overseas, so foreigners coming into Germany, so the labor cost can remain relatively low. It's a huge advantage for companies. They can benefit from that. So the whole economy as well. And that is here, one of the reasons is because of foreign migration from other European or non-European countries to Germany. Okay, now a completely opposite direction. Amazon will feature as an example, I think at least twice in today's session. Amazon has been greatly benefited from COVID pandemic, as you know. Yeah, but back then, already before 2015, Amazon was growing, very successful, also ventured into different business, and originating in the US. Yeah, and that's a very common way. US companies would like to reduce labor costs. Also, there's limited supply in the US, even though the US is very large, but there's so many tech companies. If you think about IT companies, in Europe, do we have any strong IT companies? Maybe SAP. Yeah, some people say SAP is the only European IT company of name, but all the other ones, most of them are Americans. Now we also have a few Indian companies and Chinese companies, but Chinese companies mostly are domestic players. Yeah, so meaning there was this many IT companies, quite a substantial competition, high cost, labor cost in the US for IT professionals. Or in general, so very simple. Amazon as a global company would like to reduce cost. So they're looking at different markets. Maybe they've seen also here this chart. Wow, India is the place to go. And that's eventually what they decided. We need to relocate some of our business to India and take advantage of lower labor cost, highly skilled labor force, availability, easy to hire, relatively good regulatory environment for IT professionals, and so forth. And so they established their own center, also including call center in India. Yeah, and then they can serve then the customers from India. If you dial from the US, you dial a US number and it will be forwarded to India. And then you have an Indian customer service, IT professional, and so forth, who will respond to your queries, not only from the US, but also worldwide. So it's a common trend to relocate some of your business. Here, Amazon, and Amazon is just an example of many other companies. And for IT, India is a very typical destination, and I'll also present you some data providing support for that. So that example was from 15 to 18. Now fast forward, we're now in 2022. Germany, USA. So two major economies. As we know, Germany has a population, give or take, 83 million. Interestingly, we have only 1.1 million IT workers. It seems here also in Germany, studying informatics, IT, or not even studying, because if you're an IT worker, you don't necessarily need a university education. You can also learn that otherwise. But we have a relatively shortage of IT workers. So I remember one of our classmates is an IT expert. So Germany might be a good place to find jobs. And also here, Germany seeks software engineers. Germany, blah, blah, blah. And also in IT, the language is not so important. Do you know what languages are listed on CVs of IT professionals? Python, C++, blah, blah, blah. Computer languages. That's how you communicate with computers. And outside computers, if you really have to communicate with people, also possible, English would be sufficient. So IT professionals are fairly global. So meaning also, if you would like to find a job in a foreign country, if you're an IT professional, it's easy. But the thing is, we don't have many in Germany. Only 1 million. In the US, okay, we have maybe 3 times the population, but we have 12 times the IT workers. Many more IT workers. And the thing is also, many IT workers nowadays in Germany and in the US, they're not locals. Among these 1.1 million, there are many non-Germans, because Germany has tried to attract foreign IT professionals. I think they call, what is it, blue card or something. Some kind of imitation of a green card, but it's called blue card. Very innovative idea, very creative. Not very successful. They only attracted not that many, because also Germany is in competition with other markets, such as Japan or the US. The US pays more. And the US could also attract a substantial number of IT workers. They have the domestic ones, plus many foreigners. And then they have more than 12 million IT workers. Yeah, I talked also about before, we have a very flexible labor market, a very rigid one. And eventually also, if the situation also continues here in Germany, the number of open vacancies will also go down. There's less demand, but even as of now, there's a scarcity. And that's also the interesting part. Industries and the demand supply varies across countries, and that's exactly where then companies, large companies, can then tap in and take advantage of these different situations. So now we talk more about specific governments and other labor interests. It's a very simple equation. Governments would like to protect and create jobs in their own country. And then, and first of all, first priority is their own citizens. So meaning, so governments will do, or depends. Some governments intervene a lot into the market mechanism. Other governments try to stay out of it. Yeah, but the very simple logic is governments try to protect its own country and its own people and its own jobs. Very simple terms. Also the US, it makes it very difficult for foreigners to find jobs in the US or get work permits unless the jobs are in demand, and then it's easier to enter that market. Or also then if companies would like to relocate, they try to prevent that, hoping that the domestic company will not relocate, or maybe even what we've seen now, will onshore, meaning relocate foreign business back to home markets because of deglobalization and disruptions in supply chains and so forth. And there's some incentives they may provide, and as well they also then provide restrictions to what is possible. And then we can think also from multinational corporation, not only your own market, but also the foreign country you do business in. So if a German company does business in the US or in the UK and so forth, then they have their own subsidiaries. And then local governments in foreign countries, they try to limit the transfer of people, meaning that the German company cannot so easily send people to another country. It's restricted. There's all kinds of red tape, regulations, which makes it complicated to relocate people, meaning that instead of expats, foreigners, they should hire locals. And there are also other ideas behind, because whenever companies relocate, then also there's the wish that then they can acquire the knowledge. So that we have seen a lot in joint ventures. Western company from the US, from Germany, relocates to China. They want to sell cars in China. First, they're being required to produce locally, so produce cars in China. And they are not allowed, now they are, but back then they were not, to set up joint ventures with a local partner. And that means they have a local partner. They need to hire local managers, not only local technical workers, but also managers. And then in a joint venture, the idea is that the local partner, the Chinese partner, will learn from the German or from the American company, absorb that knowledge, and maybe they can set up their own company. So they transfer and absorb that knowledge and take it to use it for their own incentive. And at the beginning, very often, countries in these host countries, they offer all kinds of subsidies and incentives. You do business in our country, you set up a factory, 10 years tax break, or easy permits, easy access to land, free land, and so forth, all in the expectation you come, you relocate, and then also hire locals. And depending on what kind of setup, they also have their own interests behind in these kind of things. What we also then have, it depends, it varies quite a bit, labor unions. So labor unions in some countries can be very strong. Not sure whether you have observed the news. Have you heard about IG Metall in Germany? So this is a industry-wide labor union. They represent many, many employees and companies in the industry of metallic and so forth, manufacturing industry, and they demanded more pay for all its members. And in Germany, labor unions, they usually demand for higher pay. Labor unions in other countries, they may not have such strong voice. Or maybe also in France and some other countries, they might have strong voices as well. Yeah, so it means labor unions is a factor that needs to be considered. US, Germany, France are countries where you have industry-wide labor unions. And some of them have very strong bargaining power. Yeah, and for companies, that's of course a disadvantage. And they need to consider that whenever they calculate and make any estimation in terms of where to locate, because that can be a factor. In Germany, labor unions also, if we hit a severe recession, they will, of course, one of the main motives of labor unions is improve working conditions and secure jobs. That's what we also have seen during the Corona COVID-19 crisis, that they have negotiated employment security for its members. Very often, maybe not so strongly in the industry-wide labor unions, but more in the internal co-determination inside each of those companies. So another factor that is also important to consider is global competition. So global competition, nowadays there's no separate market. Maybe North Korea might be one of the few closed markets, but all other markets are very open. There's a lot of exchange of company, people, and so forth. And that means whenever you do business, even if you stay at home, you might have foreign entrants, foreign competitors entering your market, and that will change the dynamics. And that can change the dynamics very substantially. Because from an HR perspective, you need to find people. Depends on, in particular, if you're considering maybe highly skilled people, IT professionals, highly skilled engineers, or some top managers, and so forth. And many companies are competing for the same, and that drives up prices. And it's a dynamic market, so it's changing the environment. Whereas Eastern Europe used to be a very cheap place to source highly qualified people, it's not that cheap anymore. The cost is evolving, it's changing, and that needs to be considered when making these scheduling plans and forecasts. And it's difficult because we don't know how the dynamics will change over time, but that's then part also of different statistical or other procedures, how to estimate how it will develop based on different competition. And then you need to consider cost is just one factor, but also innovation and other factors are important. Silicon Valley is the place where a lot of innovations in the IT industries are happening. So many companies there, they do set up some R&D centers and so forth there, even though the cost is very high. But also the gains can be quite substantial there. And of course, global competition can also provide some inspiration. You can learn from other companies, see how they organize, how they manage, and so forth. So that can also have not only downsides, because it increases cost positions, but it can also generate some kind of ideas and innovations. Okay, one last aspect when we think of here the factors that influence the HR planning would be a cross-national cooperation and conflict. Implications, we can think of these trading blocks, European Union, where we're also situated in here in Germany, free mobility of companies, of people. We have also other arrangement, NAFTA in North America, or some other organizations that do not have such a strong influence, such as OECD, or some other blocks where you try to agree on certain aspects, World Trade Organization and so forth, which try to consolidate or standardize to some extent the labor conditions and regulations across different countries. There's some kind of standardization. Very often also at the regional level for multinational corporations, very often that also implies that they may consider setting up regional headquarters. A regional headquarter in the European Union for American companies if they do a lot of business in Europe, or maybe in North America. That happens a lot, also US companies, but also foreign companies from Europe, if they want to do business in the US, and by regulations, it makes more sense to to offshore production, meaning you would produce also in North America. You can of course produce in the US, but it's very expensive. Many companies then they go to Mexico. Mexico is also part of a NAFTA agreement. They produce their cars and other supplies in Mexico and then service that market. And so there are lots of consideration that needs to be taken into account. And there are some other aspects we need to consider. One somewhat not super recent example, but what we have seen not long ago, Brexit. Yeah, you have heard about Brexit. That took a few years ago place. And now I would like you to think about what's the impact of Brexit on the labor supply for multinational corporations doing business in the UK. Yeah, so overall, Brexit contributed substantially to shortage of labor in the UK because the foreigners, they did not get work permits so easily, or not new ones. The ones who stayed, mostly they could maintain their status, but also many people simply left, particularly highly qualified professionals. Because Brexit not only made it more difficult to get new work permits, also to maintain or to work permits, and also created kind of negative atmosphere. And if you're highly skilled, highly qualified IT professionals or banker, and you have the choice where you can earn your money and so forth, then they also went elsewhere. And I know also in academia, quite a few Europeans left UK because, yeah, why should I stay there? I'm not welcome here anymore. Conditions are deteriorating, and then they leave. And UK is also no surprise. It's suffering severely now under economic crisis, much more than most of the other European countries. And one of the factors that contributed is also the HR, labor supply, because they're not able to source cheap labor. Now it sounds a little bad, but lower cost, yet highly qualified, or simply they're difficult to fill positions.